Hi there everyone, this is the Innovative Traders and welcome to our channel. So yeah guys, in this video I'll be doing a market breakdown on US30, NAS100 USD and USD GPY. Remember we had US30 and NAS100 USD from the previous weeks and also USD GPY. So now I'm back with an update as these pairs are now actually playing out as anticipated. So now let us get to the very first pair, which is US30 without wasting any further time. Let's take a look at US30. So now remember we had this price action where price was actually moving to the upside in a bullish trend. We had a higher high, higher low, higher high, high low, higher high, higher low, higher high, higher low, double top as failing to break the previous high, coming back down to regain momentum, gave us a higher high, higher low, higher high, our lowest low. Then this was our highest high, our all-time high. Now we're anticipating price to give us what, a higher low before it can continue to push towards the upside. Remember, this is basically a bullish market. Indices are, I can say, 80% bullish most of the time. So now remember we had this price action here whereby we took this as our impulse leg. This is our ascending channel. Ascending channel basically means that they're going to drop to the downside. Our ascending. So this is what we had basically. We had something like this: 1, 2, 3, and we had this at the our swing lows at the bottom, swing lows at the top, swing lows at the bottom. So now, previously we had we were looking for selling opportunities from this level because of this is what actually we initially focused it. We had a double top. We had a double top. Then we had this. We had this being our first touches, second touches. This was supposed to be our third touch, but price didn't actually reach that point, and we took this as an override on the double top zone. So we're expecting selling opportunities from then, but then price didn't really give us. They didn't really stack up those enough orders from this consolidation to actually through to the downside. It gave us a mini consolidation and it pushed back up, failing to drop. Remember I said I also had an order below this consolidation. Then the price failed to activate my order. Then it pushed to the upside. So now it has given us this price action, this nature. It has given us this nature here. We call this a pattern extension. We call this a pattern extension. We call this a pattern extension, giving us our dead touch. Giving us our dead touch. Remember, the market won't always give you those perfect dead. Won't always give you those perfect dead touches, where you get something like this. Where you get something like this. Push up again, a third touch, then it drop. It don't always give you this nature because of this is basically a textbook example. So the market is imperfect. As long as you know the basic principle behind an ascending type of channel, you would know how to react when the market presented to you. So now this is basically what the market is giving us. This last price of action in the form of an ascending. Another thing that is confirming that this is basically our selling that our sell bars is confirmed is this pattern here: left shoulder, right shoulder, head, right shoulder, a push down, a break, a retest of the neckline as a form of our first consolidation, then a push down. This is basically a slanting head and shoulders, ascending type of channel, impulse down, high value area, double top. We're anticipating what, selling opportunities from this level. So we'll be looking for what, bearish continuations from this level. So since this is what price is giving us, what you need to wait for and what you need to look for from this level. You can use this recent 2 touches, 1, 2, as your guideline for a downtrend. So basically we're anticipating price to consolidate around this area, maybe touch the trend line, give us a continuation pattern, then taking it below this pattern as a reduced risk entry. I won't take a higher risk entry because of we are still above this line. This is basically our double top zone. We have to trade below it. This is where we want to be trading at, not above there, not above it. So now we want price to give us what? The consolidation, a mini push down on the 15 minutes time frame, then a smaller consolidation. Then we can take our selling opportunity to the downside. Our first target being here. Our second target being here. I'm basically targeting swing lows. That is where I'm actually paying attention to what the market reaches there. That's why I'm marking them as my take profit levels. So our second take profit, then our last take profit will be somewhere around this trend line, because of this is basically an uptrend. It's an uptrend in a form of an ascending type of channel, having a high, low, high, low, high. After higher low, we're anticipating what? A swing higher low. This is our high. We're anticipating what? A higher low. So this will be our overall target this year. Then if price breaks this trend line, obviously we are holding up until the 90% rule. If it breaks here, we're holding up until the 90% rule. Then price from here can start to shoot back towards the upside, since this is basically a bullish market overall. So now our overall target is going to be around this area. Everything is confirmed that this is basically going to be what? A sell buys. We're having what? An ascending type of channel. Swing high, swing low, swing high, swing low, swing high. We're anticipating what? A swing low. At the top, they have an impulse up, a pattern extension in form of breaking the high to catch people on the wrong side of the market. Then a head and shoulders in a slanting manner. A first push down. Let me clear this up. A first push down, a consolidation, a bear flag, then another push down. We're anticipating what? Our second entry up until to the downside. So we're basically going to be taking what? Selling opportunities to the downside, provided that the market present them to us. So we are looking for selling opportunities on US30. Wait for that continuation. Since the market is impulsive on the 4 hour, wait for that solid continuation. Continuation from that point there up until this level. From there, you can start to look for those swing buys. So I think that's it for US30. We are looking for selling opportunities since we had what? Since we're having a swing high, a reversal, a double confirmation of a reversal and shoulders, ascending pattern extension, an M formation, breaking the high, catching people on the side of the market to actually pull back inside and push to the downside. So we are actually looking for what? Selling opportunities up until this level on US30. So let us take a look at NAS100 USD. NAS100 USD is almost the same thing, but on NAS100 USD, I don't see any reversal pattern as yet. But then we're having this price action going for recent touches from this high here, from this high, low, high, low, higher high, higher low, higher high. You're anticipating what? A higher low. I'm basically referring to our swing lows and our swing highs, because that's basically what I usually like to catch since I'm a swing trader. So now this is basically what we're having, going for recent touches. We're having this 1, 2, 3 structure. At the top, our swing highs. At the bottom, our swing lows. 1, 2 at the bottom. So we are anticipating price to push back to the downside. The reason why I like to go for recent touches, if you can take the line from this here, trend line from here, price will give you a bit of an error. Your trend line will pass through price. So that is why I always go for what? For recent touches, because if you want to deal with what? Our recent price action. So we're having swing high, swing low, swing high, swing low, swing high. We're anticipating price to give us what? A swing low before it continues to give us those buying buys. Since NAS100 is also what? A bullish market. This is basically an uptrend. But then since you're on a swing high, we are looking to take those sells, because we're going to take a bit of a longer time to give us what? A swing low. And if you can check, we also broke a swing high in this manner, and we broke very high. broke very high, and currently price is sitting on this level here. Removing this trend line to this level just to focus on what is happening on the current price. This is what we're actually seeing. Let's go to the 1 hour time frame for a clear picture. Marking up our levels, this was basically our highest high. This was our mini swing low from the 4 hour time frame. Removing this here just to get a clear picture. Price broke this level in this structure. I cannot refer to this as a reversal pattern because of, in order for it to be a reversal, for according to the way I trade, in order for it to be a reversal, price has to crash down. Before it crashes inside it, either give me a double top, then break below, give me continuation, or give me a head and shoulders pattern, then break below. That's when I can know that this was actually acting as what? As a reversal and not as a trend. That's how I can confirm that this is basically a reversal pattern. Because what you must know is that most of the time, a lot of people are mistaken between an ascending type of channel, a descending, and a trend. You can have something like this. Impulse up, this nature. And most of us are going to take this as a reversal pattern, but then you have to check the nature of it inside what is happening inside the pattern. In order for it to confirm a reversal, I have to see a break below the trend, then give me what? A consolidation in a confirmation that this basically was acting what? As a reversal pattern. I cannot just say it's a reversal pattern because of it's in the form of an ascending type of channel, because price can just do something like this. It can do something like this. It can impulse up, correct, impulse up, correct. Then you let's say we're having high value area on the left, we are expecting price to reverse from this point, but price decided to give us this nature, a continuation pattern, then shoot to the upside, creating what we call, there's this pattern that I call running channel. From this level it can shoot to the upside, creating what? A running channel. So it's a matter of reading between the lines. Just check what is price actually. It's okay, I can see this price is sitting in the form of an ascending. So now what is happening inside that price? What is the last leg telling me? Does it confirm my reversal point? No. Yes or no? Yes or no? So you have to see something. You have to either see a head and shoulders within the pattern or a double top within the pattern in order for you to confirm what? A reversal, and a full impulsive break violating the previous low give us what? A continuation pattern to push to the downside. That is when I can confirm a reversal pattern. Until it breaks it, I'm still taking it as a trend. Until it breaks this, I'm still taking the whole of this thing as a trend. Do you understand? So I can only confirm a reversal if price breaks and give me a continuation pattern. When I'm saying break, I'm talking about an impulsive break, not a corrective break, because price, if can move in this manner, break correctively, it can still continue to the upside, treating this as an impulse, correction, continuation. So this is basically sitting as an uptrend until it breaks below and give me a correction in form of what? A head, a right shoulder, a head, and a left shoulder. I'm still looking for what? For buying opportunities. So now, hence I'm saying, that is why I said I don't see any reversals on NAS100 USD. Yes, I can see it's on a high value area, but then am I seeing a reversal? No, I'm not seeing a reversal. So I have to wait for price to present for me a reversal pattern. I know we can have something like this. We can argue to have something like this. This is ascending. That is true. It has broken a key level. But then, what is the nature inside it? In order for me to see an ascending type of channel, there are some certain natures that I follow. So price has to squeeze up here, give me a mini pattern, push down, give me consolidation, maybe hover around the trend line, then break. I'll start looking for selling opportunities from this level. I don't really like catching entries at the top there or inside the pattern here, or inside the structure, I mean to say. I prefer waiting. I don't care how long am I going to wait, as long as I'm going to get that a clear confirmation. because of, remember, in one impulse leg there are a lot of opportunities, so you don't really have to like have what you call FOMO, fear of missing out. No, you have to be patient. Let the market come to you. Don't follow the market. Let the market come to you. Let the market give you what you really expecting. Don't dictate the market. So for me, I won't take any selling opportunities from this level until it breaks, because why? I'm a swing trader. If you're a scalp trader, you can take a sell from here, but be very careful of this low here. This is still an uptrend. This is still an uptrend. Why do I say that? If you can look at how price is moving, this is impulse, correction, impulse, correction, impulse, running channel, impulse. This can act as a correction to push further to the upside. Nothing is stopping it from doing that. So if you're taking a sell from here, just be cautious of this level here, because from here NASDAQ can still bounce to the upside. This is not acting as a reversal for my side until it gives me those reversal confirmations inside the pattern, because the reversal pattern is very much clear. It's very much clear. For an ascending, you will see price pushing up, giving you the first section, push up again. The second section, we're calling it a middle section. Then we were expecting price to give us what? Let me remove this. To give us push up, give us a dead touch. It can go there impulsively or correctively, give us a dead touch. But then, for my case, I'll wait for price in order for me to buy, to sell, to look for those to confidently hold those as I'll wait for price to break below trend line, give me confirmation in the form of a left head, right shoulder, continuation, then push down and hold it to 90% rule. It doesn't matter where you're catching it, as long as you're making money as long as you're making money in a safe way in the market, and as long as you are respecting capital, because you can catch it from the top here, it can still push up and take you out. Try to catch it again. Basically, you are not dictating the market. You're catching it again at the top, it takes you out. Catching it again, imagine taking 5 lows in a row just because of trying to catch the market at the top there, instead of waiting for this impulse leg. If it can take you out here, maybe it can be because of maybe your setup is invalidated or stop loss hunt or manipulation, something like that. That is going to be one loss. Instead of taking those losses around these areas, it's better to take a loss when something is confirmed than when something is not confirmed, because of when something is confirmed, you are going to be happy that at the end of the day, I followed my trading plan. It doesn't matter if I took a loss or a win, I followed my trading plan. That's what matters. So rather wait for something that is confirmed before you can than taking these trades at the top there. Currently, NASDAQ from Business City is not giving me a reversal. It's still acting. This can still act as a trend. This can be an impulse. It's an impulse, obviously, and this can act as a continuation to the upside. Or price can give us our first confirmation as an ascending, then wait for price to drop down, push impulsively, break back below our double top zone, treating this as our liquidity point in wiping all those who are trading the highs and lows, wiping them off, coming back down. Then we're trading below the structure. That is when I can now confidently enter my selling opportunities up until this level. This is basically the neckline up until this level, being our first take profit. So wait for price to develop and give you those entries. Only take selling opportunities from this level, because catching it from the top here, it's very much risky. It can play with your emotions. The market knows how to humble people in seconds. So wait for something like this. This will be our confirmation, and also look for maybe any sort of head and shoulders or a double top. Those reversal patterns. Yes, we're having a double top here. We're expecting price to drop below, but then we need extra confidence for us to take these selling opportunities. So now this is what I'm currently seeing for NAS100 USD price. I can't take it from this level because of it can correct to here and push back up, and maybe give us an entry from here and drop down, give us a left shoulder, then break below. Treat this as a neckline. So rather than taking it at the top, wait for price to commit itself and wait for the market to come to you before you can take it. So that's it for NAS100 USD. The reason why I'm saying this is going to my first take profit. Price from this level can just correct to here, give us a a larger structure, then push to the upside. So this is basically going to be my first take profit this year. If price breaks below and give me that sell confirmation, my first take profit, and I'll wait for price to give me another entry as a confirmation of this low. Remember, the aim of this strategy is all about paying attention to how price is reacting on our swing lows and swing highs. Obviously, from here I'm holding it up until this level here. The reason why this was previously our channel. If you can check, this is going to be my second take profit. So on NAS100 USD, wait for the market to come to you. On US30, wait for the market to give you the continuation pattern before you can take it and trade below that double top zone. So yeah, that's it for NAS100 USD. Let us get to USD JPY, which is the last pair. USD JPY also had it for about, I think, 3 weeks from now. For about 3 weeks. This is what we had previously. Initially we had something like this. Yeah, something like this. We're looking to sell off this double top zone here, but then price failed to commit. Yes, it rejected to the low, but then it retraced back up and shot up again to this level. So it failed to sell from this level. Now price is giving us this price action. Let us take a look at what the market is. If you can look on the left, this is basically an area of sell sensitivity. This is where the market has a strong reversal point. Some call this points of liquidity. So this is where we get those strong push to the downside. This is where the market is currently sitting at. And if you can check how market got there, it got there in a structural manner. Obviously, we're having our high as an important level. We're having our low. We're having our swing low. We have our higher high, our low, our lowest low, our swing high, low. Why? Swing high, swing low, swing high, swing low before this one here. So this is basically an important level, because price can still come back to this level and push back up. So you just have to check how price will arrive to this area. So back to how the market has approached that level. It went there in a structural manner. Going for recent 2 touches, this is basically a rising wedge. Let us adjust this well. This is basically a rising wedge. A rising wedge is a type of a reversal pattern. So we are still looking for selling opportunities for USD JPY. This is what we're having on the higher time frame, and a rising wedge. We have our higher high, our swing low, and we have our lowest low. Now price is at the top there. So we have to check what is price telling us at this current moment. Let us go to the 4-hour time frame to identify the phase that the market is currently in on the recent price action. Price pushed up impulsively. It gave us this nature. This is basically an M formation. This is basically an N formation pattern. The first peak, a drop. The second peak, then we're expecting what? A drop. And if you can check here, we're having a left shoulder, head, a right shoulder, first impulse down. We're anticipating what? Selling opportunities. So we're having what? A rising wedge, a double top, a point of liquidity. We're expecting price to push to the downside. So when I'm saying point of decay, I'm simply referring to what? A high value area. Why do you call it the high value area? That's where the money is. That is where we put our focus on, those high value areas on the higher time frame. So this is what we're having. This was our double top zone. Let's remove this initially. We had this, our neckline. And if you can check how price broke the high, it broke with a similar pattern from the higher time frame, a rising wedge. It broke above, impulsively it went back inside. So if you were trading the high and lows, Obviously, after this break, you're expecting price to give you a retest, then a pushback up. So now price broke the high and came back down, gave us this nature, a full impulse down as a confirmation for ourselves. We're waiting for what? For a correction to give those extra confluence to show that okay, now the sellers are now ready to enter the market. So it pushed down, it closed impulsively. Now what are we waiting for? We are waiting for another consolidation as a continuation pattern to the downside. And if you can check, double top zone, point of liquidity, rising wedge from the high time frame, rising wedge from the small time frame, left shoulder, head, right shoulder, break of the neckline, and a retest as a continuation pattern. We anticipate USD GPY to what? To drop to the downside. So we're looking for what? Selling opportunities on USD JPY. And again, you can use this as your point of reference. Let us go to the 1 hour time frame so you can see it clearly. 1 hour time frame. What I'm actually referring to. You can use this as a point of reference. So this is what we're currently having. Let me bring this back there. Then let's have neat charts. We had our first impulse down impulse. We had our correction. Our second impulse, we're now anticipating what? A consolidation here. Consolidation to push to the downside. Our order below here, our stop order above. First take profit being here. Taking it from here. Stop loss above here. 35 pips. Our first take profit. It's about 30%. So we are having what? Left shoulder, head, right shoulder, impulsive break of the neckline, and a retest. Then you're pushing it to the downside. Remember, we had something like this on ADUSD, where price breaking the neckline and retesting it in a form of a flag. So we are expecting price to give us what? Selling opportunities from this level. This is what you must wait for, a consolidation, because of price is basically impulsive. I mean, it's in a corrective manner. The impulse leg is now has stopped on this area here. We're anticipating to give us what? Simply wait for price to develop. In other words, wait for price to develop and give that consolidation before you can enter. Always take reduced risk entries, guys. I recommend reduced risk entry because of they are higher probable. Even if it can take you, from my side, even if it takes me out, I don't get angry or anything. Because of, at the end of the day, did the right thing. You follow your trading plan. The aim is to follow your trading plan, but then high risk entries are a bit more risky because of they like to play around with your emotions. Imagine if you were I know a lot of people quote high risk entry from here, which is very nice. It's very nice, but then take those trades out of, let's say, out of 10. This type of trades where price approaches a level impulsively, then you enter as high risk entry. I assure you, out of 5 times it can take you out and fully develop into a reversal. I'd rather wait for something like this than to I don't know, act as, I don't know how to put it, but then than to catch those entries up at this level here, then go bargain. How can I put it? In general, I don't like taking high risk entries, and I don't really recommend people to take high risk entries, especially if you're a beginner. You're at a beginner level, unless you're advanced, and unless if you don't care about your capital, you can take those high risk entries. They do work, guys. They do work. Like this one, it worked. But then, think about it. What if you took it and it took you out? It started to go up. What were you going to do? You're going to get emotional. You take it again and it takes you out again. Because if you are impatient, you have to wait for a commitment. Something like this, impulse down, full confirmation, then you enter the break. Just being patient. You don't have to trade every day on the market to make money. You only need about 2 or 3 trades to make money. 2 or 3 to make money. You don't have to trade every day. You don't have to put yourself under pressure unnecessarily. You just have to be patient whenever you're trading, and you have to respect your capital at all times. You only need those. You can find yourself taking about 10 trades in a month, 10 accurate trades in a month. Only 10 accurate trades. Then you would have made money. you would have made money. So that's it for you for USDJPY. You're looking for selling opportunities. NAS100 USD, we're still waiting for that confirmation. So put NAS100 USD on your wildcats. US30, you're waiting for what? For a continuation. It's in a form of it's similar to this here. USDJPY, we're waiting for what? For a continuation to push down. US30, you're waiting for what? For a continuation to push down. NAS100 USD, you will see it maybe Tuesday or Monday late. So that's it for the video. Another thing that I wanted to show you is that I saw something here on USDJPY. Okay, let's remove this here. I just want to show you why you have to pay attention to how, like you have to like understand structure. Take a look at if you're having something like this as being support and resistance. I'm not saying support and resistance doesn't work. It does work. You just have to like know how to use it well. Let's say you're having something like this. Let's go to the 4 hour. You're having something like this. Let's say you're having something like this. This being your resistance level, because of obviously it has a lot of turning points. This being your resistance, and this being your support level. This here being your support level. I just want to show you why you have to pay attention to how the market breaks those certain levels. Support and resistance does work. I don't use it, but it does work. You just have to understand how price. You have to ask yourself for how price is approaching my support level, how price is approaching my resistance level, how price is breaking my support level, how price is breaking my resistance level. So if you can check out how USDJPY has been breaking these two levels here, these two levels. Obviously, if it broke here, you're anticipating price to give us what? A retest, then a buy. This price broke here because of it wanted to catch those who are trading, who are just catching those highs and lows, trading support, who are just trading support and resistance, not understanding the nature behind the market. If you were smart and trading support and resistance in this way, you would have seen that price is breaking that level structurally. Then you'd simply wait for price to come back to this area. If you wanted to take a buy, this is what you were supposed to do. Wait for price. It broke above your resistance level. You are now taking the support. Wait for price to come back to the level in a corrective manner to give you what? A confirmation of a buy. What I'm simply saying is that, let me give you a rough sketch. You're having your support line, your resistance line. I was doing support and resistance back then. I was using it. So it does work. It all depends on how you are using it. You don't have to like, when price reaches the resistance level, you sell. When it reaches the low, you buy. No, you have to check, how am I approaching that level? So what you must do, if price move in this manner, approaches the level and breaks it, you have to check, how did I break the level? Do I see any structure below this level before I can break? If you want to take a buy, since you broke resistance, you have to wait for price to give you what? A continuation pattern. Before you can take those buy. Don't take it immediately when price rejects, maybe in some sort of a candlestick. No, because of price can just pull back inside and give you a continuation, then go back inside. So you have to ask yourself for, how is the market approaching my support level? Am I approaching it structurally or impulsively? That's what you have to do. If you want support and resistance to work for you, just ask yourself for, how am I approaching those levels? How am I approaching these levels? Am I getting there impulsively or correctively? You cannot just because of price is broken above, now you want to buy. No. How did price break? If you want to buy, wait for a continuation. Don't rush. Wait for the market to talk to you. Wait for the market to come to you. Wait for something like this. Then you know, if you see something like this, this is basically what? A bullish continuation, a bullish flag. Then you take it from here. You order here, then a stop loss below. You can take it to the upside. That's how you can effectively use support and resistance combined with structure. Basically, you just have to ask yourself, how is price breaking those highs? How is price breaking those lows? Look at this nature of price action here. We had these significant levels. We had this here. We had this. Just look at how price is breaking those levels. if you want to master support and resistance. Look at how price is breaking those levels structurally, then it pulls back inside. That's what you have to know. How is price breaking my support level or my resistance level? You just have to be cautious on everything. Don't just jump into the market because of the market that's broken a key level. No, don't be that person. It's breaking it structurally. Always understand structure, always understand the nature of the market. How is price breaking that level? How is it breaking it? Look at how price broke here. The first pattern, look at how it broke. We had this, obviously you had this as our so-called resistance, but then price gave us this 1, 2, it broke above. You're expecting a retest. Obviously you're entering here, maybe just sniper entry, it takes you out and drops to the downside, and now you're calling the market a scam, or forex is a scam. No, it's not the case. You just have to understand what is happening to the market. Read between the lines. How did the market break them? How did this break? How did price break the market? How did price break? I'm sorry about that. How did price break a key level? If you're breaking a resistance, if you're breaking a resistance, wait for price to give you a consolidation before you can enter to the upside. Because this is what the price will happen. It will break the high structure and come back down. This is how basically the market makers trap a lot of people. So if you're trading only these levels, you're going to struggle a lot. You have to understand, how did price break that level? Check this level here. How did price break here? Imagine if you were placing your sell stop around this level here, then a stop loss here. It takes you in, it takes you out. You have to wait for confirmation. If you wanted to sell around this area, you have to wait for price to fully break impulsively, consolidate, and give you a bearish flag. Then you can enter. Same applies to here. Wait for price to break impulsively, give you a consolidation, then enter. These consolidation, guys, are basically stacking up of orders. Remember, price creates an imbalance nature in the form of an impulse. After the imbalance nature, it will give you this nature. This nature is basically the market makers staking up orders to give us that energy for the high momentum to happen. An imbalance, this is basically price balancing itself, staking up orders. After those orders are stacked up, price will continue to the upside. That's what you have to wait for. Confirmation. Wait for confirmation. If you're taking support and resistance, just check or how price is breaking those levels. How is it breaking those levels? If you had something like this, if you had a resistance here on that level, just take a look at how price arrived at that level. How is price approaching that key level? Price broke above. Okay, price broke above. How did it break? Do I see any structure before price is broken? Do I see any structure? Yes, I'm seeing the type of channel. Do I have to take a buy? No. This is basically a reversal. This is basically catching people on the wrong side of the market. If it was a clean breakout, you're supposed to see what? An impulsive break, a consolidation as a confirmation. Don't just use one confluence. But then if you can check out price broke, it broke in a ascending manner. That's how we know that price will come back inside and give us those selling opportunities. This is basically a liquidity wipe. Just check out how price is breaking those levels. Take a look at this same scenario. Price broke our support level. How did it break? Structurally, that's why it pulled back inside and gave us our buying opportunities. In this manner, someone would have argued that, okay, price is broken below. I'm seeing a continuation. Yes, you're right. But then, if you're taking this continuation, you have to take like below this here. If you can check, nothing would have triggered you. You'll still be safe. So check or how is price breaking those levels. Same applies to this one. Price broke structurally. People are waiting for a retest to push back up. If you're taking structure, waiting for what? You know, this is basically the first touch, second touch, third touch, middle section, a rising wedge, high value area, liquidity wipe, expecting price to pull back inside. Easy as that. Now we're having our confirmation, we're pushing to the downside. Just if you're trading levels, if you're trading support and resistance levels, just check or how is price breaking those levels. This is basically your homework. How is price breaking those levels? Don't just take any break and retest. Check out how did price break? Did it break impulsively or correctively? If it broke impulsively, then that's easy. You're having a level. You're having a level. How did I break? I broke impulsively. What do I need to see next? Impulse after impulse, we're expecting what? Correction. After a correction, you're pushing to the upside. How did I break? Impulsively. What am I seeing? A reversal pattern. So don't look for any retesting, because if you're seeing something like this, price will obviously break back inside. So you just have to check yourself and understand the nature. How is price breaking? Okay, if it broke impulsively, what do I need to see next? A correction. Okay, I'm seeing a correction. What kind of a correction is it? Is it a continuation structure or a reversal structure? Remember, you can only have two structures in the market: reversal and continuation. And you can only have two phases: impulse and correction in the market. So you just have to ask yourself, how is price breaking? Price can just consolidate to a resistance level. Break in this manner. Don't just take a retest. No. Ask yourself, how did I break? I broke correctively. Basically, I mean, this is acting as a false breakout. We are catching people on the wrong side of the market. We just want to side with the banks. It will come back in. Push down. Create an imbalance, stack up orders, then push. That's what you need to wait for. Confirmation. Simple as that. Don't confuse these things. Everything, I don't want to lie to you. I just want to be honest with you. Every strategy works in the forex market. You just have to understand the nature of the market. Every strategy works in the market. Just understand the nature of the market. Then you're going to use strategy more effectively and accurately. That's it. There's no such thing already. This doesn't work. Everything works. There's a reason why these things are here. There's a reason why the trading view creator created these tools here. There's a reason. He knows that everything works. You just have to everyone has their own ways of approaching the market. You just have the most basic thing. You have to understand what the nature of the market. If you can understand the nature of the market, then you'll definitely know how to apply these tools correctly. Everything that you see here, you'll know how to apply them correctly. Trend lines, ray lines, Fibonacci, harmonic patterns, all those things, you can name them. There are many. You can know how to apply them correctly if you understand the nature behind the market. Always ask yourself, how is price moving? How is price breaking? How is price doing this? How is price doing that? You will never go wrong. I'm not saying you're going to be 100%. That is impossible, obviously. But then 90% of the time, you're going to make it. You're going to make it. In my own opinion, a trader must not take 10 losses in a row. You must not take 10. As soon as you see yourself taking 10 losses in a row, 10 losses in a row, just know there's something wrong that you're doing. You have to sit down, go back to your trades, check what is it that I'm repeating, because there's always a pattern. So each and every study that is built for forex trading, it does work. You just have to know how to use it. Know how to use it. How will you know how to apply it correctly? You have to understand the nature behind the market. You're taking support and resistance. It's very easy. Support and resistance. Resistance, support. Now the market is moving. How is the market approaching those levels? In this manner, you know, okay, this is basically a liquidity trap. People are getting caught. Price will reverse. If you want to trade a breakout and retest, obviously price has to give you this nature. Break above, consolidate. That's when you can take what? Those buying opportunities. You have to ask yourself the right question. What am I seeing? What is price doing? Price is corrective. Okay, what kind of a correction am I seeing? Is it a bullish structure or a bearish structure? If it's in this manner, you cannot expect a breakout and retest, because this is simply a pattern extension into catching people on the wrong side of the market to actually what? Push back inside. That's how the market moves. If you want to avoid to be caught on the wrong side of the market, just pay attention to how the market is moving, how the market is approaching that support level, that resistance level, that key level. Those areas, check how the market is approaching it. If you're using a Fibonacci level, it's very easy to use a Fibonacci level. You have to see price impulsing up. Okay, let's move this. Obviously, this level is for measuring retracement levels. Price is impulsing up, impulse, consolidation. Using a Fibonacci level, obviously from the swing low to the swing high. You're measuring your how can I put it? Your correction levels. You just have to check how is price approaching those significant levels on the Fibonacci level, or on the Fibonacci levels. Is it impulsively or correctively? Because some of us are they're just plotting a Fibonacci level, then they wait for price to come back to that key level in an impulsive manner, then start to take those buying opportunities. But then you didn't ask yourself, how did price get to that level? If it came here correctively, yes, you can safely take it. But if it came here impulsively, then that's another story. You have to wait for further more confirmation. You cannot just take it. It's all about asking yourself how. All these tools are working. You just have to know how to use them. By what? Understanding the behavior of the market. The behavior of the market. I usually like to say the market is like fixing an engine. If we have given you, if we can purchase you the most expensive tools in the world to fix an engine, if you don't understand the behavior of that engine, those tools are not going to become as useful as they should be. Because of why? You don't understand the behavior of that engine. So in order for you to apply those tools correctly and effectively, you have to understand the behavior of the engine. How is that engine working? What is the behavior behind it? Same applies to the market. Understanding the behavior of the market, you will know how to apply all of these tools. Usually not all of them, but then they are all working. Yes, you will know how to apply the tool that you actually using. Since remember, you're all using different tools on the forex charts. So it's all about understanding the nature of the market. That's it. Understand the nature of the market. That's the basic of the market. Understand the nature of the market. The market can only move in two phases: impulse and correction. Okay, fine. I have my support and resistance levels. How is price approaching those levels? Correctively or impulsively? That's what you must ask yourself. Okay, if on your plan you're having that when price breaks a support level, yeah, it turns into a resistance. I have to sell. But then ask yourself, how did price break my support level? How did it break it? Impulsively or correctively? If it broke impulsively, what is it that I have to wait for? You're having a support level, price breaks the support level, it turns to a resistance. What is it that I have to wait for? If it broke impulsively, a continuation. A continuation. This is more confirmed because of you're seeing what? A break below your support turning into what? Your resistance. How do you break impulsively? What do you see? A sell continuation pattern. Unlike breaking like this and expecting a retest. No. It doesn't work like that, because if it can break and pull back inside and give you consolidation. But if it break in this manner and give you this, it's a different story. It's going to sell. So ask yourself, how is price breaking that? I think I've said enough for this video, guys. Let us meet on the next video. I really hope you enjoyed this lesson, and I really hope you have a productive week ahead. These innovative traders, we out.